Hello there, I'm Anita. You're watching Bizworld. The 15th general election will provide clarity to investors regarding political stability in the country. Trading activity on Bursa Malaysia is also expected to be better, supported by the possibility that GE15 will be held in the near future, prompting a pre-GE rally in the local market.
If you track, the previous GE, the before and after impact on the stock market, certainly there has always been a pre-election rally. During the, except for GE14, previous one, there's always been a pre-election rally. So you ask me whether there will be one now, hopefully there is. All these are quite obvious.
Apart from the election, an expected slower pace of interest rate hikes in the United States would help stabilize regional markets, including Bursa Malaysia. The FBM KLCI is expected to touch 1,580 points by year-end, supported by more foreign fund inflows. On the ringgit's performance against the US dollar, the brokerage believes the local currency will trade at the 450 range until the end of this year. However, it is expected to strengthen in the second half of next year to around the 410 range. Foreign investors continued to be net sellers at Bursa Malaysia last week, marking the fifth consecutive week of net foreign fund outflows worth 336.9 million ringgit. According to MIDF research, the only day that the market saw a net inflow from foreign investors was on Tuesday. The top three sectors which saw net outflows by foreign investors last week were financial services, technology and consumer products and services. Local institutions were also net buyers for the third consecutive week, with net buying of 413.47 million ringgit last week. Meanwhile, local retailers turned net sellers at 76.56 million ringgit after net buying for the previous 3 weeks. To date, international funds have been net buyers for 24 out of the 40 weeks of 2022, with a total net inflow of 6.29 billion ringgit, while local institutions were net sellers for 29 out of those weeks, with a total net outflow of 8.47 billion ringgit. The unit price indices of building materials increased between 4 and 12.7% in September, compared to a year earlier. According to the Department of Statistics Malaysia, the unit price index of steel, as well as steel and metal sections, rose by 8.7% and 8.3% year-on-year, respectively. On month-on-month basis, their unit price indices fell by 2% for steel and 0.9% for steel and metal sections. However, other building materials remained unchanged, such as plywood and roofing materials. Meanwhile, an annual comparison showed the average steel and cement prices increased by 6.4% and 10.1%, respectively. Global telecommunications leader Nokia has been engaging with the government to provide private wireless 5G network solutions in the country. Its managing director for Malaysia, Maldives and Sri Lanka, Datuk Muhammad Rauf Nasir, said this is in line with its target to support enterprises in Malaysia in their digital transformation journey.
We've been engaging very closely with the government and with the provider in the area of these private wireless. I think we see a lot of traction in the industry and enterprise that looking for that kind of solution. And we are the market leader in the private wireless network infrastructure.
He added that it is critical for enterprises to accelerate the adoption of these technologies and unlock new opportunities to boost businesses. Nokia has 4 major portfolios, namely mobile network, cloud and network services, network infrastructure and technologies. In Malaysia, the company sees opportunities in areas including network infrastructure, which includes fibre solutions, as well as its software offerings. The World Bank and IMF chiefs said the risk of recession in the global economy is growing due to rising interest rates and slowing economies around the world.
So there's the risk and the real danger of a world recession next year. The advanced economies are slowing in Europe, and so we'll see where it goes into next year. But the currency depreciation means that the debt levels for the developing countries are getting more and more burdensome.
The World Bank estimates the pandemic pushed around 70 million people into extreme poverty in 2020, the largest one-year increase since global poverty monitoring began in 1990. That's all the time we have on Bizworld today. I'm Anita Woo. Thank you for investing your time with us. Be well.